So I didn't do much of physics. In fact, I did not do physics at all when I was in school. But then, you should know something about concave mirror and is it convex mirror? You know, if you see all these big trucks, they will tell you that the distant object appears nearer. So it's something like that with Forex too. We have different time frames in Forex. We have 24 hours, we have 1 hour, and 1 day, 1 week, 1 month. So each time frame is showing us something different. For example, if you are looking at 1 hour time frame, it might be going up, and then you look at 1 week and it's going down. So, do you buy or do you sell? That's why we do multiple time frame analysis or top to bottom analysis. It's by comparing the higher time frame to judge the lower time frame so that you would know the general direction of the market. Now, before I get into this video, look at it like this. In a day, we have 24 hours. So if you're on a daily time frame, you have just one candle. But or if you're on a 1 hour time frame, in 1 day we have 24 candles. So one candlestick on the daily time frame is 24 candles on the 1 hour time frame. So it's possible for you to have 24 candles going up or going up and down. And then on one daily candle, you would just see probably a doji or something that is in between. So we have different the structure for the markets are different across the different time frames. So this video is about the different time frames that we have and how we can use it to align our trade to know the direction of the trend. Enough talk. Let's get to the video and see what we can learn about multiple time frame analysis or top to bottom analysis. Let's go.
Welcome to today's video. But before we go further, I need you to smile. Come on. A lot of people, you might have had a very bad day, stressful day, but then don't always forget to smile. It's one of the little things that we often overlook and don't pay so much importance to. So with that big smile across your face, let's go into what we have for today. So let me just close this. Now the topic for today is about top-down analysis. Some people call it top to bottom analysis in Forex trading. Now, top-down analysis is one. Top-down analysis or top to bottom analysis is one of the many ways that you can employ in Forex to further strengthen the reliability of your analysis. Now, a lot of people fail to do this, and that is why for a lot of people, their trading is not always so successful, so to speak. You just look at your time frame and then you think, okay, this particular one I have with me now, this is my 15-minute time frame. It looks like the market wants to go up because, of course, now, come on, look at this. This is a very strong support, okay, that is probably going to already stop price from going up here, and then when it eventually broke through, it became a very strong resistance. Definitely. So what you should want to do here is that you would want to, I'm speaking like someone that is just doing analysis on this time frame. Okay, you want to go from here and you want to trade the market up. So you enter here and then you put your stop loss, say around this place. Now, you might be surprised, or you will be surprised. You might be surprised that your analysis might be wrong. Okay, it's not your fault. It's what you did not do right. Now, it is wrong to look at the market from one point of view or one perspective. There's something called an holistic approach, so to speak, by doing your top-down analysis. Now, top-down analysis is like looking at the big picture, looking at what the market is saying. What is the structure of the market? What is the general structure of the market? What can I get from the market? What is the market trying to represent at this particular time? So that's what top-down analysis is. And it involves not looking at your time frame alone to trade. Okay? One of the mistakes you would make is just to do your analysis on this time frame and just, alright, say you want to use your support and resistance alone, and then this is a very strong support you would want to buy. Besides, the first candle that formed was a bullish candle, the next one was a bullish candle. You would just want to enter here and just trade the market. Now, you'll be surprised if it does not work out that way. If you've been paying attention in class, I mentioned something. I said in one day that you have just 24 hours in one day. So one daily candle represents 24 candles on the hourly time frame. Okay, so one daily candle, beg your pardon, represent 6 candles on the 4-hour time frame, because you have 6 4 hours in just 24 hours. So if you are working from the say 30 minutes time frame, one daily candle represents about, that should be 48 candles on the 30 minutes time frame. Another simple way to put it is this: if you are on a daily time frame, it is going to take 1 day for one candle to close. If you're on an hourly time frame, it's going to take 1 hour for one candle to close. If you're on 15 minutes time frame, it's going to take 15 minutes for one candle to close. So if you are looking at these two bullish candles here and you are thinking, yeah, market is going up, you should want to join, it will be wrong, because this is 5:33. That means we've had about 15 minutes. Okay, so from here now, from these 3 candles, if you want to know what the market is saying for these 3 candles, it is best to go to your 1 hour time frame, because everything is still under 1 hour. Unfortunately, market is no more going up, market is coming down. But you wouldn't know that if you just did your analysis on the 15 minutes time frame. So likewise, alright, if you think market has been coming down, this is 1, 2, 3, 4. Okay, we have 4 1 hours in just 4 hours. So if you just go up and check your 4 hours, you would see what the candle has actually been doing, that the market has been coming down. So the simple or the slight bullish movement that you detected was just the this support trying to reject price. Okay, so it was this support trying to reject price, not necessarily that the market has started trending up. But if you just check the analysis from the 15 minutes time frame, you would be wrong and confused, and then you would lose, or the market will go against you, and you will start blaming probably your broker. It is not your broker's fault. Say if you go to 5 minutes now, see, 5 minutes has actually even gone higher, because you have, how many 5 minutes can you find in 24 hours? Come on, do that yourself. So you will be wrong to think you just join the market by just doing the analysis from your time frame. So the rule is this: do not do the analysis alone or on your time frame alone. Go higher. Go like 3 time frames higher than the time frame you want to trade. If you want to trade 15 minutes, you should go on 1 hour, 4 hours, and probably 2 hours. Same for 30 minutes. If you want to trade 4 hours, you should go on daily, weekly. Because okay, if you want to trade daily now, for example, this is a daily candle. We have 1 candle for 1 day. So you can go higher and go to your weekly, because we have weekly is just 5 days. Okay, so your 5 daily candle is just 1 weekly candle. This 1 candle here represents 5 on the daily time frame. So it lets you know what the market is doing and the structure. Is it trending up or is trending down? If you are checking here, you would see, okay, if you look at this now, the market is generally, okay, has been coming down and then look like it wanted to go up, but price has been rejected. So daily will tell you another story. Your 4 hour is going to tell you another story that is a bit similar to the daily, because it's closer to the daily candle. But your 15 minutes will tell you something that is, or your 5 minutes is going to tell you something that is farther than what your other higher time frame is telling you. So instead of just trying to do your analysis by just looking at 1 candle, it will be very wrong. See, after hitting this support, a lot of people would be like, alright, wait for the first candle, wait for the second candle. Where did it form? Is it bullish too? Fine, you can now enter your trade. Don't do something like this. You go higher to check what the structure is, what the market is trying to tell you, what the market structure is generally, to know how to place your trade or what to do. So if I want to enter this trade now, is it bullish? Is it bearish? This is a very strong support. It might actually be a good place to enter. I would want to go higher to my, say, 1 hour and see what price is doing. So I would only enter this market if my 1 hour candle is able to close successfully at this place, or if another candle forms and it's able to close above this price, because it's still within the range of this previous candle, and it does not mean, see, it's even rejecting it, it's rejecting it further. The market is coming down. So if the price closes around this place, or if the next candle opens around this place now, it will mean that market wants to come down. So the bottom line is this: don't do your analysis on one single candle. Go back or go higher and look at the general structure or the story that the market is trying to tell you now. Let me use this illustration. Okay, so this is what this market is saying. This is a 1 hour time frame. If it closes down, that means you should want to sell. If it closes below this, you should want to sell. But if you look at your 4 hour, for example, the story is going to be, alright, the story is even similar. So the minor changes that you are spotting on your 15 minutes time frame is just this place rejecting it. So for example, say on your 15 minutes time frame now, you want to go 60 pips up. Probably want to trade price to this point. It means that if you are coming to your 4 hour, that means price must be able to reject it from here to say something like this place. So it doesn't look much until you now look at the bigger time frame, and then you see that it's actually a lot when you look at the bigger picture. So this is what it is doing. Market is generally, market is trending up. Generally, if you're a long-time trader, market is trending up. However, if you look at your daily time frame, market is not really trending up. Market is trending down. Okay, so we can see series of lower highs and lower lows. Market is actually not trending up. See, it tried going up today. Market the price actually got to this point today, and then it has been rejected and it is coming down. So market was here before, came here, they were able to push it up, then the seller pushed it down, the buyer pushed it up, the seller pushed it down, the buyer tried to push it up again, and the sellers are pushing it down. So until you look at the bigger picture, before you discover that this is what the market is doing. If you want something like, if you just want to take, say, 5 pips and get out of the market, you don't really need to go higher into the time frame. You can just move on to your, say, 30 minutes and see what price is doing. You come to your 30 minutes, you can just take your probably 2 pips and move out. But if you want something tangible out of the market, you have to know what the general structure of the market is. What is the market saying? Market might be trending up on your 15 minutes time frame, on your 5 minutes time frame, and you will go higher and you will see that market is actually trending down. Okay, so don't do your analysis from one time frame and be satisfied with what you've done. It would not go well with you. Sorry, the analysis would not go well, or the result would not go well. It would not be something that you would appreciate. Okay, so try to go higher, try to move higher and see what the general structure of the market is, what the market is trying to say. Go like 3 time frames higher, be above your current time frame, so that you will get that, okay, this is what the market is doing generally, and you'll be able to align your trade with it depending on the type of time frame that you trade. So that's all about multiple time frame analysis. Don't just do analysis on one time frame. Go higher to know what the structure is. It might be a sell on your 15 minutes time frame, and it will be a buy on your 1 hour time frame. So that is what you should do. And in the next video, I would explain the types of market traders that we have based on time frame, to know where you fit and if you've been doing it right or not. But if you like this video, be sure to like it and subscribe to my channel if you want to. You can come down to the comment section and tell me what you feel about the video. I have a WhatsApp group that I'm currently running a free tutorial on Forex for 4 months. You can join the chat so we can discuss about things that are not so clear to you about Forex. So I'll see you in the next video.